Will we see new all-time highs for the Nasdaq 100 ahead of the big tech earnings? After initially gapping lower, US index futures continued to push higher throughout the European session and into the US session, resulting in the formation of a bullish engulfing candle on the daily chart of the Nasdaq ahead of those big tech earnings taking place later this week. The key question is, can the Nasdaq now create a break above the former resistance area shaded in gray here between 25,800 to 25,850 zone, where previously it had formed a double top formation. So a break above that zone could potentially pave the way for a run towards the all-time high that was hit in October at around 26,257. That level could be reached in as early as tomorrow if we get a potential break above this zone. In terms of support, key level to watch is this zone right here between 25,200 to 25,300. This area, as I zoom in, you can see that it was taken out on Wednesday of last week when the previous day's price action was completely engulfed. We formed a bullish engulfing candle on the daily time frame, and the high of the previous day's range was never retested until today, and we've bounced nicely from there. So this shaded region is very important to watch. If the index were to break below this area, say as a result of poor tech earnings, that could be significant, in which case we could well see some short-term correction. However, for as long as this area holds and ideally we climb out of this resistance area I mentioned, then the path of least resistance is likely to remain to the upside. Crude oil prices have been climbing higher in the last few weeks, not only because of concerns about supply disruptions in Iran, where the government unrest has unnerved investors that supply of oil could be hit, especially if the US gets involved, but also because of the ongoing situation in Ukraine, where the war rages on despite peace talks taking place in recent weeks. So it's been more of a supply story than demand, and we have seen oil defend this area of support between $55 to $56, the shaded green or blue area, where oil prices had previously found a major bottom back in April of last year. We tested this zone a couple of times at the back end of last year and earlier this year, and we've bounced nicely from there. Now we have seen oil create an interim higher high above this zone. This high was created in early December of around $60 per barrel. We've climbed above that area now, and oil has been consolidating in a bullish formation here before pushing higher last week to close the week above that area of resistance. At the time of this recording, this area was being tested, and we've seen a potential, well, we are seeing a bit of a bounce from that area. So watch how oil prices close today's session. For as long as it holds above this area of support, the path of least resistance is likely to remain to the upside, with the next upside target being 62, where we have the 200-day moving average converging as well. Above that is this long-term shaded resistance zone, where previously major lows had been created in previous years of around $63.60 to $65 per barrel. The key question is, can oil prices now kick on and push higher from here? For more market updates, head over to cityindex.com. I will see you in the next one. Take care.